Hello, it's Brian Shannon from AlphaTrends.net. Today's Tuesday, the 12th of August, 2008, and this market rallied on some light volume, and now we're seeing today it pulled back to the prior level of resistance near that 129 area on even lighter volume. So, once again, I have to stress that only price pays, and the low volume is more of a seasonal thing right now. That is just, it's a seasonally slow time of year for the market. And, the fact is the most important piece of information for now is that the market is still holding above this prior level of resistance at the 128.5 to 129 level. And I say 128.5, the actual resistance that this market took out was at 129, but I think you have to give it a little bit of leeway down towards about 128.5, maybe even down towards this trend line that's been intact since the lows were made right in here, and that's where that rally began up to the 129 level. So, the market still on a weekly time frame is potentially, just a pause within the downtrend and maybe heading lower again. So we have to still be very careful. If this market fails to hold on to the gains, and with a declining 50-day moving average, I think there's a greater chance that they do fail to hold on, then we could be setting up for a much deeper decline, or with these moving averages moving back and forth above and below each other, we could be in for more of a period of just kind of sideways base building, which would be the more favorable scenario. Looking at the 30-minute time frame, just to get a little bit closer view, we came right down to the conjunction of this prior level of resistance at 129, which found some buyers in there, and we also have the rising 5-day moving average in here as well. So another reason for the buyers to potentially show up is that 5-day moving average. I think that, again, if this market's to break below about 128.5, then we test that trend line. The more times that trend line is tested, the more likely it is to fail, and often it's the fourth test. So continue to just remain vigilant for opportunities on both sides of the market. Today I was experimenting with this Twitter.com. Don't ask me, or please don't email me with questions about how to use it, because I'm just figuring it out myself. But at Twitter.com, they have this stock twits, and I had posted some live trades in there that had actually worked out pretty nicely. So I was posting them in real time, so you might want to check that out. There's a link on the side of my blog about halfway down, and there's also, I guess you can go to Twitter and find out how to follow it there. But on the 10-minute time frame, what we saw was that we had a lower high put in this early morning, and then we had the lows taken out. So we do have a pattern of lower highs and lower lows. On the short term, the intermediate term is still trending higher, though. Looking at the 1-minute time frame, today was really just a quiet day, and then the sellers came in at the end of the day, and they did come in. You'll see that the market traded a fair amount of its volume here for the day, towards the last hour or so, and that's when lower prices came in. So a little bit more reason for caution there. Oil was down again. It was down. USO was down 91 cents. So looking for support near moving average again is only a potential area where we want to examine closer the activity closer to look for evidence of buyers. I said yesterday, it seems like this market's due for a bounce, but that's not enough to act on, obviously. We've still got a declining 5-day moving average, and we've still got lower highs and lower lows. So don't look at it as it's down too much or whatever. You remember the case of natural gas. Natural gas continues to stay lower. No signs of a bounce in here either. So picking tops and picking bottoms is one of the most dangerous and financially destructive strategies there is in the market. So just, the trend is your friend. Oil is trending lower, so stick with that, or just leave it alone, basically. The financials had they were down $1 today, and that kind of puts them, again, I think that you're better off just staying away from this group, but they are a headline group, obviously. They get a lot of attention, so you have to look at them once in a while just to see if they're breaking key levels. This market did break its uptrend line here. Now it's hammering away at this support at $21 a share. A move below 21, then we've got that $20 level just below it, which if that gives way, then we could legitimately see lower prices in here again. So still not clear any clear signs at all to buy financials. A lot of people want to buy them because they think they're down too much or whatever, but I still think you got to just stay away from this group. The Russell 2000 was down 56 cents. The IWM, and here we're seeing much bigger volume relatively. This market came close to the May highs in here, and actually was only down I think about 1.5% for the year as of yesterday's close. Yesterday I said it looks like it's getting a little bit extended here in the short term, and really the market it actually held up very well today. The key level in here is going to be 72.5. If the market comes down and breaks below that, then we could see a deeper retracement. But that's where we have that that 200-day moving average. We've got the 50-day moving average kind of flattened out. So this group still holds up the best on the 10-minute time frame. The retracement in here was very shallow percentage-wise. It was only down a half of a percent, whereas the S&P 500 was down 1.1%. And this is clearly the healthier group. Key levels of support are going to be 72.5. Before it gets to that, look for intraday any pullback to maybe find support along this rising 5-day moving average. That ought to hopefully find some buyers if this market pulls back. But the S&P, the Nasdaq 100. As we know, we saw yesterday that this group had made it up to the two-thirds retracement. Excuse me, of the decline from the late May highs to the mid-June lows. It made up to that two-thirds retracement level. That's where it's still kind of holding on. This market was actually up 5 cents today. So a lot of people are looking for a place to short this, but really the market has given no indication that it's time to short yet. We do have a lower high in here, it looks like, and we've got these moving averages crossing with a lower high. I think breaking below 47.50, this level is going to be important tomorrow. The key level again is down near 46. Breaking back below that 46 level, then I think we're going to see a lot worse to the downside. Also, remember that on my blog, I'm going to put up a link to a much higher quality video of this than YouTube provides.